Hi, everyone. I received something really interesting in the mail recently, so I thought I would shoot this quick video. I'm expecting our first child really any day now. And by the time you watch this video, I probably already had the baby. But I received this official qualification letter from one of the most well-known policy providers stating and congratulating me that I can now apply for this children's whole life insurance policy. And you may have heard about whole life insurance policy or permanent life insurance policy for your child or grandchild. So I wanted to talk to you a little bit about what may not be in the fine print or what may not be clear in the conversations you're having with your financial advisor. So right here it says, complete your child's application. We've made it really simple to do. So I can easily fill out the application included in the direct mail piece. I can call toll free, or I can easily apply online. So right off the bat, without having an in-depth conversation with me about my financial goals, where my assets are, without looking at my entire financial picture, they're trying to sell me this product. It's a marketing tactic. And if you do a quick Google search of do I need life insurance policy for my child, you'll see a lot of articles and expert opinions. Dave Ramsey has a good one out there about the myths associated with that. So I kind of wanted to talk to you a little bit about some of those myths that I found in the direct mail piece that I received. Here it says cash value builds over time. So what they're not telling you is that when you're sold this insurance policy, they just made a commission off of you. There's high admin costs or fees that are going to eat away at your return, and the returns aren't that great. Here it says coverage amount doubles during the year they turn 18. This is a very expensive proposition for a remote risk. So throughout this entire piece that I received, it's encouraging me to increase my policy coverage, not from 10,000, but to 15 and 20, because it's going to double when the insured, my child or grandchild, turns a certain age. In reality, this is not going to provide an adequate coverage as they get older. And when they turn 20 or 25 and 30, they can apply for permanent and whole life insurance if that is really what they need and what is best for their financial strategy. Here it also says the cash value can come into handy if I should ever need it. So for example, for college tuition or educational costs. What they're not telling you is that if you need to borrow money or use money from your insurance policy, there's fees called surrender charges that are charged to you just to use your policy. You're tied to a contract, even to use your own funds in the policy, you're charged to take that money out. So just think about that. I mean, there's high admin costs. There's, the return's not great. There's commissions on this. There's surrender charges. You're tied to a contract. You don't own it. These are all things that may not be communicated. It's slimy. And I hate saying that, but I wouldn't buy this for myself, for my child. I wouldn't necessarily recommend this for clients. You're being sold a product. So I recommend doing your research, talking to your financial advisor to really decide if this is the best option for you, because there are alternatives. So for example, if you're looking for, an investment vehicle for education, think about a 529 or maybe a brokerage account that is tied to your risk tolerance and you're not tied to a contract, or maybe a UGMA account if you're a grandparent. There's alternatives that may suit you better than being tied to a contract in an insurance product when someone's making commission and fees off of you. So if you have any additional questions, please reach out to us. Use us as a resource. Visit us at boltfinancialgroup.com.